Distinguished colleagues on the dais, ladies and gentlemen, members of the media. As Onu was saying, it is indeed a very delightful occasion to be with all of you early this morning and to see this wonderful turnout for this conclave on pensions in India. And I think it is testimony to the excellent work that's been done by PFRDA over the years to really build, if you will, the ecosystem and all the stakeholders for pensions in India. And in fact, this summit as well, this set of discussions that you are having seems so interesting that I'm actually very torn that I have to leave and not be able to attend all the discussions that will follow because the topics seem very, very interesting. So it really is my own misfortune that I will not be able to attend the rest of the sessions, which as I said, seem very interesting. Now, everything that you all are doing in terms of working through where pensions are headed and how to build a pension society in India is actually very much in line and a very high priority for us as a government. We have said all along that what we want to do is we want to build a universal social security system in India that includes a variety of products, which include, of course, income support, which include health coverage, which include pension, as well as insurance. So we want to build a universal social security platform with a series of products attached to that universal social security platform so that we can provide coverage and we can provide security to every single Indian. So this is of vital importance to us, not just as a society, but also to ensure that in the long run, India will be safe, will be secure, and people will be fully able to look after their needs as they get older. So this is a very important priority for the government. And in fact, I think for all governments, this has been a priority. The NPS itself was started by the NDA government, I think about 15 years ago now. The UPA government obviously took it forward, and we are trying to do whatever we can to further accelerate and deepen pensions in India. Now, even as we are doing that, we have brought to the idea of pensions a very clear economic philosophy built around empowerment. Our government believes in empowering citizens, empowering Indians with the tools and opportunities and the knowledge to be able to take control of their lives. And in that sense, what NPS represents, a defined contribution program where you pay into the program, you take ownership of your own retirement and ownership of how that retirement is going to be funded is really very much in line with our own philosophy of empowering our citizens. And it is because of the sense of ownership that NPS creates, the sense that you are putting your money to save for your retirement, that really creates a society that has a stake in the future, that has a stake in the development of the financial system and the development of the pension system as well. So empowerment, giving people the tools, the opportunities, and the knowledge to take control of their lives and have their own dignity, to know that they have provided for themselves, is actually very, very important to us in terms of our own governing philosophy. Now, as we look at pensions in India, as we consider where we are in terms of providing security for people in their retirement, I think we can characterize it as being the best of times, but also in some ways the worst of times. Now, why is it the best of times? It is the best of times because for us to really put in place this level of empowerment for people, to be able to make sure that people are going to be able to look after themselves in their retirement. It is the best of times because we are a young nation. We have an opportunity to build a defined contribution plan and have people build their nest egg and their investments for the future. So it's very good to start now when we have a very young workforce, when a workforce that can begin to set aside what they need to for retirement. So in that sense, it is a very, very good time to get started. The other good reason to get started with this right now, and it is the best of times, is because the economy has been growing quite strongly in the last decade and will continue to grow strongly. And every government in India wants fast growth. Every government in India wants to make sure the domestic economy is doing well. And what that means is if the domestic economy is doing well, real returns in the economy also are strong. The profitability of our companies is going to grow strongly, for instance. And as long as real returns in the economy are strong and we have a young workforce, the actuaries will tell you we have a chance of making sure that we can fund retirement. Am I right or wrong? Or no? The economist here will tell you that I'm right. That's the math you have. So from an actuarial perspective, this is the time to get started with strong real returns in the economy and a relatively young workforce that can put this money aside. Best of times. But it's also the worst of times. And why is it the worst of times? It's because if you talk to people, as I do, when I'm with ordinary people and I ask them about retirement and about how they're thinking about their savings, there is both a lack of awareness and also a lack of understanding, which in some ways is even more pernicious. People don't really think, apart from those that are quite affluent and have been thinking about this for some time. Most people don't really think about something that's going to happen 25, 30 years from now. We don't really think that far ahead, and we'll say, well, fine, we'll deal with it when we get there. But they don't realize you have to start now to take advantage of compounding and to take advantage of strong real returns. So there is a lack of awareness about how to go about thinking about retirement. But there's also a lack of understanding. And the lack of understanding is to really understand how inflation works, how compounding works, and why setting aside money regularly through the market ups and downs, the whole idea of investing through an average cost basis, where that average cost basis of investing through an SIP in the market actually pays off in the long run. That basic math is not something that people understand. So there is not only a question of getting people to think about retirement, but to have them think in the right way about retirement also is quite complicated. And so we have a real difficult task ahead of us in terms of really being able to persuade people. The other thing that's very complicated in all of this is that in India we have traditionally had the very deeply held and intuitive belief, that we can't trust financial assets. That if we have to save for retirement or we have to save for the future, we have to do it through real assets, gold and real estate. These are the assets that have held value over the long run. So when people start to think 25 years, 30 years, they say, let's buy some land. Let's buy some land, and it is land that will help us in our retirement. So we have to also be able to change the mindset of people away from real assets to financial assets into products like equities, and really get them to start to have faith in the future through financial assets. And unless we can channel those savings into financial assets, we cannot do what a modern economy needs to do, which is to play a very important intermediation role between savers and investors. So getting people to think differently about financial assets is part of the challenge. It's part of why it is the worst of times. And then finally, even after all of the efforts, even after everything that's been happening over 15 or 20 years about pensions and about retirements, we are still at a point where coverage is only 8 or 12%. And at some level, it's still because people have not yet moved away from the real asset thinking towards the financial assets that the coverage is as low as it is. And here inflation has a very important role to play. Because as long as people have embedded inflationary expectations of 10 or 12%, and returns are not there to compensate them for those inflationary expectations of 10 or 12%, it's going to be very difficult to move people away from the belief, the long-held belief, which in some ways is empirically correct also, that real estate, that land will be able to give them returns higher than inflation. And in a densely populated country like India, where we have 17% of the world's population and only 2.5% of the land, 2.5% of the land, 17% of the world's population, one of the most densely populated countries in the world, real estate. And I think in our own lives, we have seen that. In my parents' generation, I have seen that, is that people who invested in real estate actually beat inflation. So that's the empirical evidence that people have in front of them. Changing that and getting them into financial assets is always quite difficult. And that's why in some ways it's the worst of times, and it is the worst of times because we have just come through some 7-8 years of inflation running over 8 or 10%. So it's embedded in people's minds, and even today when the RBI and others run these inflationary expectation survey, everybody will tell you, I expect inflation of 10%. So how do we change those expectations around when we're trying to get people into financial assets, getting them into pensions in this fashion? That's why in some ways it is the worst of times. That's what makes it so difficult. Now with that in front of us, the best of times and the worst of times, I think the work that PFRDA is doing, all of you are doing in the pension ecosystem, becomes very, very intriguing. And intriguing because what you have to do is you have to move quickly, and this is the demographics that you have to take advantage of. You have to move quickly. So even though we've done a lot in the last 15 years, I for one would say it's not good enough. It's not good enough. Because this is a bulge that's moving through the system, the demographics that we have. And if we don't tap into these demographics, get people to start to save now, particularly in the unorganized sector, as Hemant was saying, if we don't do that now, it's going to be very difficult to catch up. And so we've got to move quickly. We've got to enroll people quickly, and we've got to have them start to invest sufficient amount quickly now. So speed and moving quickly is of the essence. Otherwise, folks, as an investor, I can tell you, and as somebody who's been grappling with the 7th Pay Commission and one rank, one pension, I can tell you, pension liability, and we've seen that in advanced economies, as Onno will